So, what do you make of the announcements at the NPC? Because the commodity space felt the pressure in trading today. Was it a disappointment, and how does it bode for the outlook of commodities this year?
Well, there definitely is a little bit of disappointment in the market, but I would like to say that this is very temporary. Looking at prices, metal prices are still very elevated compared to pre-COVID levels, much higher than pre-COVID levels. The NPC's avoidance of a large stimulus on the back of a more conservative growth target of 5% definitely does place a cap on metal prices. But we need to pivot away from the expectation that only a large stimulus can support prices going forward. The PMI figures in China show that physical demand is definitely improving for metals. They have been at expansionary levels for the last 2 months consecutively. So China is on a path to recovery. So this should support metal prices going forward, even without a large stimulus.
And we have even seen supply disruptions in the likes of Latin America and other parts of the world. How is that going to boost prices this year as well?
So it is a combination of both factors, supply as well as demand. While demand from China is set to pick up this year, supply constraints definitely remain at the fore, as you said. So we are having disruptions in Latin America, Chile, Peru for copper, for instance. There's resource nationalism throughout the world that is going to constrain supply of metals going forward. At the same time, energy costs are so high. Aluminium production in Europe is constrained. A lot of steel production in China is also being constrained on the back of high fog pollution, air pollution going forward. So definitely supply constraints while demand from China is picking up is going to bode very well for prices this year looking forward.
Sabrin, coal is having a moment. As we just heard from Ali a moment ago, China says it's going to remain a mainstay of its energy mix, and India as well sees demand rising across by 7% across its power stations by 2025. So despite its reputation in the energy transition, is coal still investable?
Well, coal is definitely going to see a slower exit than what we had expected previously due to the energy crisis globally and also in the emerging markets in China and India. So definitely coal will still be there for quite a while longer, but over the longer term, we do expect stronger growth for renewables, etc., that will pave the way for coal's exit ultimately. It's just a slower exit right now.
Okay, and what about the materials that are probably going to replace coal? I'm thinking, lithium, copper, nickel, things that go into batteries. Is this pretty much a one-way bet, or is the demand picture a bit more nuanced than that?
So in terms of battery metals, copper, lithium, cobalt, nickel, high-grade nickel, class 1 nickel. So the future outlook for these commodities is definitely very strong. As we pivot away from traditional automotives to new energy vehicles, so EVs. EV batteries require these commodities very much. There's also the solar panels that require a lot of commodities like copper. So definitely copper has a role to play in the renewable energy space. Copper has a lot to play in the EV space. So these are commodities of the future, if you want to call it, that have a very bright future.